Welcome, ladies and gentlemen, to this third episode of the Remarketing Expert Track. My name is Johan Verbois. I'm founder of IOS Consulting, but here as remarketing expert for Fleet Europe. This is a joint initiative from Fleet Europe together with CARA, the European Car Remarketing Association. And we have a series of episodes. We started with the chairman of CARA, with a podcast, and 4 weeks ago we had a first webinar on the impact of COVID-19 on the market and residual values. I would like to point out immediately to the next one, which is in 4 weeks, which is talking about the future of used cars, and automatically there will be a lot of content on online sales. But today we're gonna focus on remarketing processes. Now, what I first want to highlight as well is our sponsors. Without them, this would not have been possible. And today we've got one of the sponsors as an expert speaker. How will we go about this today? So first we will have Bertrand talking about defleeting volumes through an angle of inspection volumes. Afterwards, because we didn't yet get the voice of the trader community, used car trading community, and also from leasing companies, so we got two expert speakers there. And of course, Bertrand comes back at the end with another aspect of processes, and he's going to focus a lot on the inspection process, because that's one which is heavily impacted by this COVID times. And also he will share his vision and his ideas about how this is going to go in the future. So without any further ado, I will also like to point out you can always ask questions, which we'll handle at the end. And without any further ado, I give the screen to Bertrand. Welcome, Bertrand. Do we hear you, Bertrand? Are you?
Hello. Yes, sorry. Hello.
I'm sorry.
Yeah. Hello, Johan, and hello, everybody. Indeed, today we're going to first speak about defleeting volumes. I'm going to share you the volumes we have done over the last months. If you go to the next slide, this on the right you will see a graph where we pinpoint our average volume per country and in global at 100% for the average volumes of Q4 2019. And then we're gonna evolve to an average volume per month for every single market and on average. And there you see in general that you have a clear V-shaped volume curve, which is the black curve for the global volume, basically where in April we dropped from a 100% to a 33% average volume, mainly due to the COVID lockdown in the different countries where we are active. And this had an impact in the first half, in the second half of March until a part in May, mainly the first half of May. What you can also see is that as of June and July, daily volumes come back to a certain normal. However, there are significant differences between regions. And when you go to the next slide, you're going to see that we make a separation between, I would say, Northwestern Europe, including France, Belgium, Netherlands, and Germany. And the next slide will be more Southern Europe. The main reason is that first of all, in Northwest Europe, you have a proportion that is much more linked towards long-term leasing, where there is the majority. And there also you see a clear V-shape, both in Belgium, France, and Germany, where France had a quite drastic drop and lockdown, ending up at a 7% volume in daily volume in April. However, it picked quite well up in June and July. Holland and it's the same for Belgium and Germany to a lower extent, as the lockdown rules were slightly different. Holland, the Netherlands, that had a much more pragmatic approach on the way the lockdown was managed, meaning schools were closed, but businesses could continue, even, I would say, non-essential health businesses, meaning that they had a small drop in March because, well, everybody was looking a bit to what would happen, but very soon after, April picked up again. And we knew a drop, and still are within a drop in May, June, July. This is with an average volume in Holland of 5 to 10%. This is, we're going to see the reasons, but this is mainly due to the fact that there has been contractual extensions on the one hand, and on the other hand, there is still a kind of backlog generated by the supply chain and mainly by the factories that are delaying a bit the startup, and that has an impact on the longer run on the delivery of vehicles. Without showing you August is quite calm. Of course it's a seasonal month, so it is usually calmer, but we still see that we are a bit like 5 to 10% below the average of previous years. When we pinpoint now in the next slides to Southern Europe, there you see that a different shape within the countries, and that is mainly because those countries are mainly marked on volume level by the short-term rental business. And as soon as the COVID and the lockdown was created, the short-term rental business reacted very swiftly and tried to terminate earlier their contracts than they used to do. And there you see that you had March was really a drop for everybody, but you see an increase in the volumes in Portugal and in Italy towards the short-term rental, where pre-restitutions were done, so creating additional vehicles to be sold. Portugal reacted later on because there was really a gap in June, and they saw that vehicles were still needed. At the end of the day, what is happening is that we see a decrease again of volume of about 10 to 15% in all markets, and that is, I think, a trend that we're going to see. Even Spain, that is much more compensated between short-term rental and long-term rental, you see still in June and July a curve that is delaying by 5 to 15%. Now, what do we learn about that, and what are the consequences? And if we go on the general lessons learned, is that there is a comparable V-shaped pattern in the most of the markets. You will see, and of course there are slightly differences, but mainly the lockdown creates a very big V within the whole market, stopping the market and basically creating a gigantic or a quite impressive backlog on number of restitution. I will come back on that later on. The lockdown also had an impact on the long-term leasing, where active contract prolongations were done, and now we see that we are much more into passive contract prolongations, meaning that either fleets or private persons try to delay the buy or the acquisition of a new car just because uncertainties in economics, or just because they drive less. In the short-term rental business, there has been a drastic correction in the fleet size. A very important impact in the supply chain is also seen within the restart of the post-lockdown periods, where logistics and transport, depending on the country and mainly on the size of the country, had difficulties to restart and rerun, I would say, the factory of transporting and storing vehicles. And finally, today we see that still the delivery of new cars is more complicated than before. factories delayed their restarts on the one hand, and you also see that in certain countries, the administration for delivering new license plates has also a very huge backlog, still working from home, complicating the whole process. The volume of new cars / new contracts is also still on the lower hand. New car demands seems to remain low. There are certain exceptions in countries that incentive or have created quite a important incentives, for instance, in France and in Germany, where private persons could buy at a good condition new vehicles in order to renew the fleet. But mainly the fleet customers are still very slow into picking up. Will be confirmed by Bart later on. Good news is that the used car market is today confirmed by all major actors is really booming. The selling prices of the used cars in all categories are on the higher end, even higher than the pre-COVID prices. And the return of leasing vehicles are today very difficult to estimate and to plan. And that is why we try to do on the next slide is try to have, I would say, a more high-level approach on what volumes could come. As I said, there is a big gap that has been created during the lockdown of about, for the Macadam volumes, about 80,000 to 100,000 vehicles that should have come and that did not come, and that will bring us to an increase of volume in the months, in the quarters to come. On the other hand, of course, this has been dynamically and actively done both by the fleet market and by the lease course in order to rectify that gap and propose contract extensions. However, in the future, we need to take into account that from 2016 to 2018, there has been a fleet increase in the long-term business of about, on average in Europe, of about 5% each year. And these volumes should come in 2020, 2021, or should have come in 2021. And that is something that we need to pinpoint as well. Another positive impact in the increase of the volumes is very clearly, and we forget to speak about it, but pre-COVID, the main issue was, I would say, what will the fiscality do to green up the fleet? Today, you see clear incentives or penalties to green up fleet, which will emphasize fleet manager in order to renew their fleet, hence creating additional off-lease business. But two pitfalls to take into account. We will come into an extent where there will be possible restructurings, hence decreasing the fleet or even bankruptcies. And finally, COVID has learned us, all of us, to work differently, meaning that transportation and movement of people will be different pre-COVID than post-COVID, and that will for sure has an impact on the number of miles driven and on the number of cars used. So taking into account all these elements and just on a personal estimation, we believe that the long-term rental business, so mainly the fleet lease costs, will still have a downfall compared to 2019 of about 5 to 15% depending on the market in Q4. However, 2021 will be, I would say, an absorption of the wave that has been, or the gap that has been created in 2021, and we for sure can expect to have an increase of 5 to 10%. Short-term rental, on the other hand, is very dependent on both tourism and business, and because business and travel in general, for sure there will be at least minus 25% in Q4, and as long as there is no real substantial way in order to contain the COVID impact, this will last until 2021. So the short-term rental business will be very difficult in the near future. That is what the way we see it, how we can share the volumes, and what we see, what we show, how it will come in the future. Johan?
Okay, Bertrand. Thanks very much, and also to share some very concrete numbers, which we always love in those expert tracks. Now, I've heard indeed that used cars are booming, so that's one good thing. So that's why I want to ask Tom as well to react on that, and how was his trade during COVID? How was the trade after COVID? And I see, Tom, as well, that you've got some very nice cars behind you, but my question is, did you have enough cars during that period, yes or no?
I will share. Thank you. Good morning, everybody. I will share with you how the independent traders are experiencing this COVID period. Due to the sudden and abrupt stop of activity, sales of trade companies like ours and sales of our clients fell to an almost complete stop as of mid-March. During the early days of this European lockdown, several short-term rental companies started, on one hand, to cancel orders with OEMs and large dealer groups, and on the other hand, they started to return cars sooner than was expected. This, of course, was translated in offers coming to our independent trade channel, but within this trade channel, because of the unseen scale of this crisis, most of the trade companies adapted their purchase behavior. Some of them decided to put their purchase to a complete stop. Maybe they were counting on a price drop, and others decided to continue their sourcing. In the early days of the lockdown, the prices dropped a little, but it was very clear that after 2 weeks, prices were back to a normal level. Because of the general production stop within most of the OEMs, stocks were needed to keep their sales on a very low level, but to keep them going. The strategy of maintaining the price levels was also adopted by the most independent traders in Europe, also by us, in order to be ready after the lockdown. This proved afterwards to be the right decision, because as countries started to reopen one by one, sales skyrocketed rather quickly. Private customers indeed decided to buy a car that had to be available immediately, and this for several reasons. Holidays abroad or holidays by airplane weren't considered very safe. They wanted to avoid public transportation, and a car by private customers is more and more considered as a mobile, safe cocoon. In addition to this, as already mentioned, several governments came with different support programs to help automotive industry. There were bonuses in several countries and a lower VAT regime in Germany, and so on and so on. This was translated in our channel, a general trend of skyrocketing sales. When we compare our sales and the sales of our most of our clients in the month of May compared to May 2019, we saw that sales were 40% up, and in June sales were even doubled in this channel. And this combined with stability in prices. For trade companies like ours, this is good news, because this situation allowed us even to sell older stock at normal prices, and this without making a loss. Due to this acceleration in sales on a European scale, at the moment, the stocks are very low. For the last quarter of this year and the start of next year, we see several trends. The OEMs are increasing or adapting their production capacity because of with the loss of production. This should be recovered in some way. And of course, the CAFE plan has to be kept in mind as well. So the next 6 to 9 months will be very challenging, I think, for as well the OEMs as for the independent trading channel. On the other hand, the volumes of short-term rental returns and leasing companies are uncertain, and this might influence prices and volumes in the independent trade channel within this period. Thank you.
Great, and thanks to share. Maybe I've got one question for you now already. I have because we read quite a lot that the supply and demand in the used car market has changed a bit from petrol, diesel, electric vehicle, PHEVs. Have you got any feeling of that? What you have seen before or even after COVID times?
We still see today. It depends, of course, on the region, but on a whole, we can say that diesel is in a revival. I think that's because lots of private customers are now buying a car and they want to cover longer distances. So diesel is moving up again. What remains key is the availability. They don't want to wait for a car, they want it tomorrow. And another trend that we see is automatic gearbox.
Okay, great, thanks. So thank you for the contribution, and please stay with us for any of the questions afterwards. Now, of course, I would like to move over to Arval, Bart. I think you're a bit under pressure because also last time with the RVs, they were a lot talking about leasing companies. So I'm very happy to have you here and to give your view on what has happened during and after, and maybe share a bit of light how you see the future.
With pleasure, Johan. And first of all, thank you for inviting me to this panel. As you said at the beginning of your introduction, this is a session about processes, what has been the impact. So I thought I should prepare something in that direction, but it doesn't stop us to even touch on certain figures that I'm sure that you will be interested in as well. But first of all, let me start by saying that on the next slide, I will go a bit more in detail on that. This whole COVID-19 situation and particularly the lockdown period, I must admit, has been unprecedented in terms of being a real learning opportunity. And indeed, you had to, or we had to, as an industry, adapt ourselves very quickly. The image that I share on this slide here is really a state of mind we were in at some point in time, where I would even say, fortunately, both the new vehicle delivery chain and the remarketing channels came to a brutal standstill at the same time, because we were extremely afraid at the very beginning of those lockdowns that we would have an enormous stockpiling up all of a sudden with lots of vehicles coming back for various reasons. But that didn't happen. That didn't happen, fortunately, which meant that we could take a bit of time, take a bit of distance also from the situation and organize ourselves quite quickly. We had, of course, the opportunity to learn from Italy early on in the cycle, and that's what we did also at Arval. We had weekly calls and have been keeping those weekly calls in place ever since with all our countries. But of course, learning as quickly as possible is part of the change that we went through, and yeah, feeding each other with the right sort of feedback so that you can do something with it immediately. So Bertrand already pointed out, informal and formal extensions were quite quickly, I would say, part of the solution for most of our full service lease clients. It helped leasing companies as well, of course. Informal extensions being the ones where you know that your car is going to be delivered but don't know exactly when. And then, of course, you stick onto your previous car as long as needed, and that means less supply to sell. Formal extensions is something that most of our bigger clients, corporate clients in the first place, got used to dealing with already in the financial crisis back then, when this was absolutely necessary to drive down costs in the financial crisis, and seen this time again as a good solution at the moment in time that the new delivery chain was completely disrupted, and in fact still is today, but also at the moment in time that companies need to make immediate savings to tackle the challenges ahead. So it is true that companies like Arval, we have been encouraging our clients from the very beginning to extend where possible, for this double effect, if you want, but also in such a way making sure that we would not be confronted with overstocks in a market space where the price setting is, of course, very important and is directly dependent on supply and demand. And demand levels were, of course, completely unknown in the middle of the lockdowns. So that's the way we took it, if you want. One big element that we saw quite quickly, because there are similarities with the financial crisis, but also quite important differences. It has never been an issue to have liquidity, and specifically because the banks, and we're part of a bank ourselves, were even, I would say, a solution in this sort of situations. So we considered it not at all necessary to go for rush sales, dumping metal by way of speaking, but we decided to hold on to our stock, knowing that they could be kept under control. They should be kept under control for quite a while. And on another area, there's also something called driver sales in companies like ourselves. Throughout the crisis, we continued with our driver sales programs, because you don't need to physically switch the vehicles anyway. And that was quite successful, because you can do that in a remote way, you can do that digitally, and the buyer of your second-hand vehicle, of course, knows the vehicle already, or their relatives will appreciate that. So in a nutshell, huge learning exercise where we pulled together all the expertise across our entities immediately, talked to all our industrial partners and in the first place our clients, of course, to see what we could do to help. And an enormous acceleration of digital, the use of digital. Our activities, in fact, continued throughout the lockdown periods. Our contacts with our buyers stayed. And yeah, in that respect, business continued, even though at some point in time at a very low level. I said already, the situation of COVID-19 is to a certain degree, I would say, comparable. It has similar symptoms as what we went through as an industry in 2008, but there are quite a few differences as well. Banks are part of the solution and will continue to be in the months to come. We think we have the right tools available to help our clients to fund their stock, to fund their own stock, of course. Let's not forget that also the governments, it was already pointed out by Tom and Bertrand as well, have been extremely supportive, making sure that companies stayed in business, or if they couldn't continue doing business, that at least their people were not or didn't have to get dismissed immediately. We saw much less bankruptcies than we were expecting early on, and this is mainly, of course, thanks to the immediate interventions of governments. And consumer confidence, let's be honest, is quite important in this space, in the remarketing space. Consumer confidence determines price levels, determines demand levels, of course. So far, so good, I would say. Will that stay forever? That is, of course, a debate for later on, but so far, so good in that respect. I also confirm that, as Bertrand already pointed out, company cars will continue. We even see that clients are giving absolute preference to their teams coming to the office or transporting themselves with private cars rather than using public transportation, for instance. But of course, with the lockdown period and even post-lockdown, we still see this trend of remote working, télétravail. We see that continuing for the foreseeable future, which de facto means that that company cars will be driving less miles and that contract extensions will continue. So to try and answer already one of the questions that Bertrand put on the table, I don't think that contract extensions are over and done with at the end of 2020. I see them continuing for the foreseeable future into 2021. It is in the interest of everybody to a certain degree, because it's purely a question of supply and demand. But the demand levels are more difficult to predict. What we have clearly seen in the last few weeks, I would say, is that there is a very specific market space for good quality recent vehicles, and to the extent that the supply is there, the demand will always be there as well. Now, of course, consumer confidence does influence that to a certain degree, but so far we have not seen that demand dropping. It's in fact the opposite even, and it is to a certain degree supporting the prices right now and driving them up, as Tom was already suggesting as well, in some of the markets where our volumes cannot follow the demand levels. France being a good example, UK as well, for instance. So overall, we have, as Arval, we have accelerated our digital investments. We have pushed driver sales throughout the lockdowns. We also have reinforced our logistics partnerships. Bertrand will come back on that later on, specifically on inspection, but not only, it's about inspection, but it's also about home delivery, whether that's on new vehicles, whether that's on second-hand vehicles. We have been really reinforcing cooperations with our logistics partners in that respect. And we even have introduced second-hand car leasing as part of the new innovations to go for. We did have that already in some of our markets, UK and Netherlands being a typical example, but a second-hand car, which is of a good quality, can just as well be leased as bought or owned. And we see an opportunity there as well in our most mature markets. Most importantly, I would say we've tried to support our clients throughout this challenging period. We have been staying in touch with all our B2B clients throughout the lockdowns. Some of them have indeed seen it as an opportunity to stock themselves faster than the demand levels could be confirmed. Some of them were a bit more cautious, but all of them have appreciated the fact that we did bring in funding, stock funding, for instance, that we brought in innovative services at the moment in time when the lockdowns were over. People needed to get their vehicles quickly into their own client base to source themselves again for new ones. So we could do a lot there in terms of sanitation services with our logistics partners, delivery, and all of that, and that helped a lot. That helped a lot. So the market is good at the moment. On my last slide, I know I'm running out of time a little bit, but on my next slide, I just wanted to confirm that digital sales will for sure continue. We all know that. I know it's one of your next webinars as well, where you will dedicate some time on it. COVID-19, I see it as an accelerator more than anything else, and it has worked indeed, not just in B2B, but also in B2C. I think for our sector, for the leasing companies, offer and demand curves are the ones to really monitor very closely. They will move for sure, both of them at the same time potentially, but not necessarily in the same direction and in the same geography. So flexibility will be key. Also in OPEX, making sure that you have the right resources to go fast and to process a lot of volumes, but also be able to scale down when needed. And arbitration between countries, I should not forget to speak about that, are going to continue for the foreseeable future with all the different schemes of the different countries, the different situations. There are a lot of opportunities to come in the months to come in terms of international arbitration. We see that with Arval Trading, our own international sales organization in that respect, where volumes are booming and new combinations of countries are really arising every day, if you want. One challenge is, of course, to predict where is this all going. Short-term rental, I fully agree with what Bertrand said. It is very difficult to imagine that situation to change drastically into next year. The OEM production capabilities and plans will, of course, depend on each OEM's individual strategy, and these strategies might change. As far as consumer confidence and bankruptcies are concerned, difficult to predict. The only thing I can tell you from a leasing company perspective is that I do believe that informal and formal extension programs will continue for the foreseeable future. But of course, as Bertrand has been pointing out already, our sector has grown quite significantly in recent years. And that does mean, of course, that absolute amounts, absolute volumes, despite extension programs, if you want, I would expect them to at least be at the same level and slightly increase into the next months. But that's purely related to the growth of the past few years of this sector. So that's, Johan, what I wanted to share at this stage, and of course, happy to take any questions.
Okay, well, I propose we take the questions at the end. We'll do this after the next session. So I would like to give the word back to Bertrand, and in order to focus on the remarketing processes, the defleeting processes, and I think you will focus a bit more even on the inspection one. Okay, thank you.
Yes, thank you. As Bart has said, I think that major actors in and most of the actors within the fleet and leasing business and the subcontractors to that have done the utmost in order to relieve the end customer as much as possible during the COVID period by extending, freeing up cash and so on. If you go to the next slide, on an inspection level, basically we were, as Bart said, we were confronted with, in the case of Macadam, with a daily backlog creation of about 20,000 vehicles that were due to come, but basically did not come. Obviously, that created quite a stress in the beginning because nobody knew when those volumes would come up. And next to that, you had very limited access to dealerships. Transport and logistics were basically closed and didn't drive. And you would be confronted with very strict sanitation rules after pre-COVID, after the COVID period, where I would say the normal handover of the car would be complicated. So what we have done during the COVID period is to enable the few demands, but that were quite important at a certain stage, the demands mainly from a private lease customer or financing customers to say, look, I want to restitute my car, I want to bring back in my car, taking into account that the whole I would say supply chain for those return of cars were blocked. How could we do that? And so we implemented an app towards dealers and towards drivers or users of the car in order to very simply make a small inspection, a very limited inspection of the vehicle in order to timestamp the end of lease, geolocating the return location, and providing the key information on the condition of the vehicle, mainly are the documents there, what is the mileage of the vehicle, and provide us a couple of general pictures. That enabled the leasecos and the subcontractors to organize transportation and inspection at a later stage, and hence remove the risk or find the equilibrium between the equation of I have a driver that wants to stop his contract on the one hand, and I, as owner of the vehicle or final owner of the vehicle, I don't want to lose my asset and I don't want to lose my money. And this was enabled through that app. This will continue to go on as COVID, and there we can go in the news slide, as we know that COVID will change the habits. That is for me, as Bart said, the main learning curve that is done. The post-COVID world will not be anymore the pre-COVID world. On an inspection base, you have clearly two trends that are setting up. The two solutions existed priorly, but today it crystallizes much more. One trend is clearly focusing on a customer journey. The other trend is much more focusing on industrialization of the process. When you go into a customer journey, first you need to understand what's happening with your customer. And I speak here on a long-term basis. It's mainly the fleets. And fleets, basically, with sanitation rules, with lockdowns and so on, they want today to be removed or relieved from all that end of lease hassle. They want that their drivers have a key-to-key delivery, and that at any moment, meaning that they can exchange cars at any moment, bringing the old car and receiving the key of the new car. They also don't want any complaints or at least any surprises anymore on the off-lease damages. We know that they speak about, or fleets speak about, an additional month rent or a couple of months rent more, and that is something that they have learned to accept, but still are surprised on an individual car. And finally, they want to accompany / empower their drivers to tell, look, you are responsible of the state of the car, and this has a major impact in the total cost of ownership. On the other hand, leasecos that want to achieve those customer needs are willing to do it, but not at any condition. They still want a very efficient remarketing process. They want an efficient remarketing process that doesn't hassle too much those customers and mainly limit the complaints. They want to have a very swift supply chain, meaning a very cheap and efficient supply chain, and they want to have a hand on a very fast remarketing flow. So bringing in bringing in a key-to-key, a very efficient key-to-key remote inspection can have the following advantages. First of all, you organize both the key-to-key inspection with the driver's signature, so that the driver doesn't need to run from one return location to a new dealership, and is just relieved from all the hassle regarding the change of the car. On the other hand, a remote inspection can easily, because it has been identified by a professional, can easily trigger the transport order towards the leaseco, so that the leaseco doesn't lose time and efficiency in finding vehicles and triggering transportations. It has also an impact on the administrative, because it is a professional that takes in hand all the necessary and compulsory documentation of the vehicle and can take care of a very track and trace sending of the administrative documents. As soon as the inspection has been done, you can already also start the remarketing process, so that you can sell better or identify better the stock that you need to sell. And finally, by training your inspector, you can have a better explanation and understanding of the condition of the vehicle and of the cost that is impacted in the TCO. Of course, there are some disadvantages of remote inspections. The first one is much more organizational. You need to be aware that you need to make an appointment with 3 parties, the driver, the dealer, and the inspector, on the one hand. And of course, because you deliver that service, it has an increase in the cost of your inspection. I'm not sure today that it has a drastic impact in the total cost of the process. That is one trend. The other trend is clearly a focus towards industrialization. In the last years, the whole market evolved to that by driven by demand of leasecos, in order to bring down as much as possible every single transaction costs of the off-lease steps, meaning faster inspections, more efficient logistics, and a very centralized on big compounds remarketing process, totally digitized and very swift at all. Of course, this has a huge advantage. The main advantage is basically the cost, because everybody is in such an industrial way that you can bring cost as much as possible and limit the idle time, which today is the biggest cost of the whole process, is basically the time that an inspector or a truck driver is not driving and generating turnover. And it has also a very big advantage, I would say, for simple and low off-lease damage rules, where self-insurance is there. In countries like Spain and Holland, where it is a habit to have a self-insurance, there basically that industrialized process is very effective and works very well. In other countries where you have, I would say, another policy of defining the damage rules and collecting the loss related to the damages of the vehicles, this is less easy to do. Another disadvantage is that basically you need to understand that it is the driver, the user of the car, that takes care of a part of the logistics. And together with the driver, it is a dealership or the compound, the return location, that also takes care of a part of the logistics, meaning they are a buffer for storing new vehicles. Now, you know that Europe is still full of vehicles. Market continue to grow, exchanges continue to grow, but the logistics are still there and have a limited capacity. And so storing vehicles at the premises without at the dealership or return premises without having a swift collection puts pressure on those dealerships, which are not so keen to do it, because they are, if they are paid, the retribution is very low. Of course, in that process, even if it is industrialized, it is not a closed matter. You have a higher risk in losing your car and in losing documents, administrative documents, which has an impact in the remarketing process. And so basically, both, even if it is industrialized, we have example that such a kind of way is not specifically the best in order to have the ideal cycle, or the shortest cycle time between the end of invoicing of the rent and the collection of the money. So these are the two main trends that are crystallizing right now. One question, and we come there to the next slide. One question is, yes, but Bertrand, what about the new technology? What about artificial intelligence that is coming up within the inspection process? Can that not help in order to not have a crystallized process where you have first customer experience and industrialization on two hands, but basically have it all together at once? Basically, I need to say, in the 2 or 3 years that has passed, there has been huge advances within the artificial intelligence and within the suppliers that provided automatic inspection. However, for having tested several items, and even Macadam trying to go into that, we see that we are not there yet. We are not there yet because at the end of the day, what the market requests from an inspection company is a report that is undiscussable and correct for all parties. So it is the report that is the valued report that is key, and therefore you need to be 100% right and consistent. Today the gates are there. They have an acceptable level on certain types of exterior damages, but they don't cover everything. There's still an important sensitivity towards the conditions, both in light, humidity, the types of the types and the condition of the vehicle and the types of damages. The classification of the damages still is an issue in the sense that it's not because you identify the damage on a picture using AI that you automatically can classify it correctly and define the correct depreciation rate or depreciation amount for that damage. And finally, there is still manual work to be done. So you still need to have a human going around there. Other pitfalls are also need to take into consideration. First of all, the flexibility in the supply chain, because the supply chain is quasi at the saturation. You see, or we see, that we sometimes need to go from one compound to another in a very fast way. Now, having hardware to be displaced each time need to be recalibrated has an impact on that kind of solutions. Every compound site has also its own configuration, meaning that you have I would say a calibration or a training phase to put back again of a couple of weeks / a couple of months. And again, not all types of vehicles, damages and repair modes can be identified. So I hear people asking, but Bertrand, what are you saying, and what is the point of view of Macadam? Are we against artificial intelligence and gates? No, not at all. We still believe that we will come there, but today it is much more, we consider it much more as an assisting tool for our people, for our inspectors, rather than really the replacement of a human being. It will support us in detecting damages and even avoiding typing issues like mileage and VIN that can be there. It can also put a frame in the decision making around the types of the damages, but basically we still believe that what our customer wants is a correct, acceptable, non-disputable report, and there the human factor will remain the key driver, but AI and the future technologies will for sure have an impact on the efficiency and quality improvement, and that will be possible in the near future. Voilà, Johan. That is a bit the two big changes that we see, or the two big trends that we see in the inspection business of remarketing the vehicles.
Okay, thank you very much. We're now going to move over immediately to the Q&A, and I'm sure, looking at the questions here on the screen, that we can't handle them all. That's clear. Already, thanks a lot for your contribution, and looking at the question, we're certainly going to come back to you all with one. I'm going to start with Arval. Bart, I think an interesting one is everyone talks about used car leasing, and the question is this happening mostly by individuals or also by corporate clients?
Mostly by individuals, and there are markets that are more open to it than others. I pointed out two of them already earlier on, UK and Netherlands being typical examples. But in this unprecedented context, I would say, we see that some corporate clients, existing and new ones, are even wondering whether they should not move part of their fleet into that direction. And I'm not excluding that it will come in the corporate segment just as well.
Okay, interesting. A question for Tom. You were talking about diesel engines increasing in demand. Is this linked to a certain type of car, or is this across the board, or is it maybe linked to certain regions, or what's your view, Tom?
It's rather on a European scale, and when you talk about segments, it's obvious not the very small cars, but as you move to small SUVs, bigger SUVs, and higher segments, diesel is moving up again.
Okay, so it's more focused on the higher segments and the SUVs. Okay, that's a clear answer. Bertrand, I gave you a bit of time, but now I'm going to come with the big question that I've seen a few times is, what's the price difference between your two options? Because of course you see two trends. I see also there are two opportunities. Almost you go to a further customer-focused way of working, or otherwise you really look at costs. Can you say anything about price differences in those two?
Yes. First of all, we invoice in a kind of way by the minutes. It's the effort that we need to put that defines the cost. So basically, providing you an amount that fits all Europe would be crazy, because if you go to the Bavarian region where salaries are higher, but the density of inspection is higher, is totally not comparable with if you go to Corsica or to Galicia, where wages are lower, but the density is also less. So in general and in average, there are 3 additional steps that you need to take into consideration between the time of an industrialized inspection and a remote inspection. Of course, you have the time of the inspection. That is nearly the same for everybody. But first of all, you need to take time make that correct appointment. You need to drive to the appointment, and the appointment itself has more idle time because you need to provide more explanation to the driver, and you need to find the keys and find the driver. On average, within that process, it takes you about 1 hour more work for us in order to take the standard timing of an inspection, industrialized inspection, towards a remote inspection. And there you need to add also the cost of traveling, meaning the car cost and the fuel cost. So you speak here about 1 hour salary plus a couple of euros for the travelings is for sure an additional. For sure, if you multiply that by 100,000 numbers, it's a huge amount. However, business cases, and there you see it, you need to look at the value of it. If an inspection company is dealing with a whole remote inspection, and that is what we see, we take over the job of quite a lot of people. First of all, there is quite a lot of workforce that is busy engaging the off-lease. On the other hand, you need to take over and organize the whole transportation and logistics. And finally, there is a big gap and a big effort done by the lease codes that do it on an industrialized way in collecting the documents and not losing any documents. What we see is that fully integrated lease codes, even with remote inspections, have a faster cycle time between last rent payment and collection of the car, meaning a faster cash process and hence a faster supply chain process than even an industrialized one. And at the end of the day, that hour additional work and a couple of euros for the transportation is for me not comparable to all the hidden costs that you have in your whole organization. Of course, are we objective? You might ask. Basically, I can tell you we apply the same margin for an industrialized as for a remote inspection. So I think at the end of the day, the both are viable. It's much more a sense of do I want to go more to the customers and invest more into that, or do I want to limit my cash out to my inspection company? But that is depending for every person.
Great, thanks for your information here. Back to Bart for another question here is, with the environment that is currently taking place, do you think that leasing companies still need physical stores to deliver used car vehicles, or where people can come and have a look at vehicles, or do you believe it will go more online? Because the last years we've seen a lot of initiatives of leasing companies opening stores, physical stores, where you really have hundreds of vehicles. Do you see that trend moving now after COVID?
Difficult to say. It depends on the strategy of the individual lease code just as well. I think it's not just about what is the general market evolving towards. So speaking for Arval in this respect only, we are not investing in physical stores ourselves. If we do anything, it is partnering, and we believe in that model more than setting up your own retail stores and everything that goes with it. I think everybody has to define that for themselves, what is core business, what is not. We are part of a bank that also contributes to that sort of approach. But if you allow me, I would make one reaction. One thing is certain, that is that COVID-19 has all shown us the way to a full end-to-end handling with digital communication of the process, where I believe that logistics are more important than ever before, logistics in the broadest sense. And I wouldn't exclude that we see much more home delivery services, home pickup services appearing than physical retail stores arising everywhere, and specifically when it concerns leasing companies. I hope that answer was clear.
Last question, Bertrand, again. We have a question here that the end of contract inspection, does it also check for EVs the state of the battery or for PHEVs?
Yes, so there are now toolings available to check the state of the batteries. Now, of course, we inspect two types of vehicles, the short-term rental ones, and which are mainly industrialized. And there we can afford the equipment on compounds in order to check the battery. We are currently working on how to report that in so that I would say an individual, a non-professional, can understand and can be relieved and can relieve of the doubt regarding the battery. For remote inspections, this is still an issue because the investment of the equipment is quite big. And today we see vehicles that are 3 to 4 years old. So the number of full electric vehicles and PHEVs are today still limited in the portfolio of the long-term lease returns. But it will come.
Okay, thanks. So I would like to thank the expert speakers for their contribution, for their time, and for answering also those questions, which are always a bit unexpected at the end, what you will get. First, I just want to highlight again what will come within a few weeks. So within 4 weeks, we will have another one, which is focused on the future of used cars and which will be full of online sales. And again, I would like to thank the sponsors to make this possible again. So I think we've kept it nicely within the hour. And thanks for your nice reactions also in our chat, and see you within 4 weeks. Thank you.
Thank you. Bye-bye.